He is fundamentally an equity and credit investor, meaning he focuses on stocks, corporate bonds, and derivatives, not short-term trades like Euro USD or GBP JPY. He is known for his long-term strategy, holding trades for years. His deep, fundamental analysis and concentrated equity bets have shocked the globe. One of his most famous trades turned $27 million into $2.6 billion. That's not luck. That's skill, precision, and mastery at the highest level. So join me in today's video as we break down the biography, philosophy, and life lessons of William Albert Ackman, the man who turned conviction into an art form. Before we move on, here are key terms you should know. What is a hedge fund? Investors looking to generate high returns sometimes turn to hedge funds. A hedge fund, a company that manages investment portfolios with the goal of generating high returns. A hedge fund collects monetary contributions from its customers and creates portfolios by investing that pool of money across a variety of financial instruments. The goal of a hedge fund is to develop investment strategies to maximize returns for its customers' portfolios. Hedge funds operate in much of the developed world, and many manage billion-dollar portfolios. Participation in a hedge fund often requires a large initial monetary investment, usually more than $1 million, and is therefore limited to a small group of high net worth investors. Shorting a stock is essentially betting that a company's share price will fall. In this strategy, an investor borrows shares from a broker and sells them at the current market price. The expectation is that as the price drops, the investor can repurchase the shares at a lower cost, return them to the broker, and keep the difference as profit. But if the share price rises instead, the investor must buy back the shares at a higher price, leading to a loss. Now, let's get back to the video. William Albert Ackman, widely known as Bill Ackman, was born on May 11, 1966 in Chappaqua, New York, USA. He grew up in a Jewish family, the son of Ronald Ackman, who owned a real estate financing firm called Ackman Ziff Real Estate Group, and Kathy Ackman, a teacher. Though his family was comfortable, Bill was raised with an emphasis on independence and critical thinking, qualities that would later define his unconventional investment style. Bill attended Harvard College, graduating magna cum laude in 1988 with a degree in social studies. For his senior thesis, he wrote an analytical paper titled Scaling the Ivy Wall: The Jewish and Asian American Experience in Harvard Admissions, a glimpse into his early curiosity for systemic structures and fairness, traits that would influence his business philosophy. After college, he continued to Harvard Business School, earning his MBA in 1992. At Harvard, he became known for being bold, analytical, and outspoken, often questioning norms, which professors admired and peers found intimidating. While studying there, he began to experiment with investing by buying stocks with his own money. The stocks rose in value, encouraging Ackman. 6 months later, he convinced classmate David Berkowitz to join him. The pair invested together until their graduation in 1992. In 1992, fresh out of Harvard, Ackman co-founded his first investment firm, Gotham Partners, with his Harvard friend David P. Berkowitz. The fund started small, around $3 million, but it quickly drew attention for its deep research and contrarian bets. Ackman's strategy was rooted in value investing, inspired by Warren Buffett and Benjamin Graham. With a twist, he looked for undervalued companies where he could influence change. During the late 1990s, Gotham invested in a mix of public and private companies, including real estate and golf courses. But trouble hit when Ackman began challenging large corporations publicly, especially through short positions and activist campaigns. By the early 2000s, Gotham Partners became entangled in complex and controversial investments, particularly around real estate companies and insurance firms. Regulatory pressure and investor withdrawals forced Gotham to shut down. In 2003, at just 37 years old, Ackman went from being a Wall Street rising star to a man under investigation and out of business. But in his own words, failure is an opportunity to begin again, this time more intelligently. In 2004, Bill Ackman came back stronger. He founded Pershing Square Capital Management with $54 million in initial capital, much of it his own money. Pershing Square became one of the most famous hedge funds in the world, known for activist investing, where Ackman takes large positions in companies and publicly pushes for strategic or managerial changes to unlock value. By 2014, Bill Ackman was at the peak of his career. His hedge fund, Pershing Square Capital Management, had delivered massive returns for over a decade. He was managing over $20 billion, and his reputation as an activist investor was unmatched. Then almost overnight, it all began to unravel. In 2012, Ackman publicly declared Herbalife a pyramid scheme and shorted the stock for $1 billion. He expected the company to collapse under regulatory scrutiny, but instead, it survived and thrived. Rival billionaires like Carl Icahn and George Soros took the opposite side, turning it into one of the most famous Wall Street battles ever. Despite years of effort, investigations, and intense media coverage, Ackman eventually closed the short in 2018, losing an estimated $1 billion. At the same time as Valen and Herbalife were imploding, Ackman's marriage was falling apart. He and Karen Ann Herskovich separated in 2016 and divorced in 2017 after 25 years together. Ackman later reflected that this period was emotionally devastating, trying to manage billions under stress while also ending a marriage and protecting his family's privacy. In several interviews and speeches after his comeback, Ackman acknowledged this period as the lowest point of his life. He said, "I was going through a divorce while dealing with the worst investment losses of my career. It was humbling. It was painful. Everything I was known for, my confidence, my judgment, was in question." After 2017, Ackman intentionally stepped back from the spotlight. He closed Pershing Square's public fund to new investors, simplified his portfolio, and refocused on long-term, high-quality companies, not public crusades. He also rebalanced his personal life. In 2019, he married Neri Oxman and spoke about finding stability, creativity, and balance again. By 2020-2019, Pershing Square was back on top, with one of the best hedge fund performances in the world. His COVID hedge trade in 2020 that turned $27 million into $2.6 billion symbolized his complete comeback. Investment philosophy. Ackman describes his philosophy as concentrated, activist, and long-term. He typically runs a small portfolio, 8 to 12 stocks, and focuses on businesses that are simple and understandable, run by strong management teams or capable of being improved, capable of compounding over time. He once said, "If you find a business you can own forever, activism isn't necessary. But when great businesses are poorly run, activism can be the path to greatness." Ackman also embraces public transparency, often revealing his positions and reasoning openly, a move rare in hedge fund culture. He believes openness builds credibility and pressures management to act. As of 2025, Bill Ackman remains CEO of Pershing Square Capital Management, managing billions in assets. He continues to be a leading voice in finance, speaking on corporate governance, economic reform, and transparency. He has also launched Pershing Square Tontine Holdings, a SPAC, special purpose acquisition company, exploring innovative ways to connect public investors to high-quality private businesses. Major trades and campaigns. MBIA, 2002 to 2008. Before founding Pershing Square, Ackman made a bold, lonely bet against MBIA, a bond insurer he believed was fundamentally overvalued and misunderstood. He spent years researching the company, publishing detailed reports that few took seriously until the 2008 financial crisis when MBIA's model collapsed. Ackman was vindicated and earned hundreds of millions, gaining a reputation as a brilliant but controversial truth teller. Ackman took a major stake in Target, pushing for the company to spin off its real estate holdings. The campaign failed, and the stock dropped, but it cemented his activist approach as one of persuasion and public strategy. Herbalife 2012 to 2018. Perhaps his most infamous bet, Ackman shorted Herbalife, calling it a pyramid scheme. He even presented a 3-hour PowerPoint publicly explaining why the company would collapse. This turned into a Wall Street war with fellow billionaire Carl Icahn, who took the opposite bet. Ackman ultimately lost around $1 billion on Herbalife when the stock rallied. Still, he gained respect for his transparency and conviction, even in defeat. Chipotle, Restaurant Brands, and Canadian Pacific. Ackman's biggest wins came from long-term activist positions where he influenced management. Canadian Pacific Railway, Ackman replaced the CEO and helped modernize operations, resulting in one of the most profitable turnarounds in railroad history. Restaurant Brands International, Burger King plus Tim Hortons. His investment multiplied several times over. Chipotle Mexican Grill. He invested after the food safety crisis and helped guide a recovery. COVID-19 pandemic trade, 2020. In early 2020, Ackman made a legendary hedge against the market, spending $27 million on credit protection. When COVID-19 crashed global markets, that hedge exploded in value, yielding $2.6 billion in profit in just weeks. He then reinvested much of it into long-term holdings at the market bottom, an example of defensive foresight and courage. Here are a few core lessons from Ackman's journey. Conviction matters. Be willing to stand alone when you believe in your thesis. Transparency creates pressure and accountability. Mistakes are tuition. Ackman's Gotham collapse made him stronger. Activism can be a force for good, not just profit. Emotional control is key, especially when the world doubts you. Here are a few quotes from Bill. If you want to have a good investment career, it helps to start out by losing money when you first start. Investing is about being more right than wrong, and when you're right, make it count. You don't need to make a lot of investments to do well. You need to make a few good ones. Concentration builds wealth, diversification preserves it. We spend months, sometimes years, understanding a business before we invest a dollar. Patience is our advantage. Conviction is what separates the investor from the speculator. I've learned more from my mistakes than from my successes. Pain is the tuition of experience. Failure doesn't define you, how you respond to it does. You don't have to be brave all the time, just at the right time. Risk is not knowing what you're doing. The markets are the world's greatest humbling mechanism. You can't compound capital if you don't first compound character. Money is a byproduct of good decision-making, not the purpose of it. The goal isn't to die with the most money. It's to live a life of purpose, impact, and integrity. Bill Ackman's story isn't about luck. It's about resilience, conviction, and reinvention. He's fallen, failed, and risen again, proving that in markets and in life, the true edge isn't information. It's discipline, patience, and belief in your process. If you enjoyed this story and want to hear more journeys of legendary investors and traders, make sure to like this video, subscribe, and turn on the bell so you never miss a story that could inspire your own financial and trading journey.